Okay, so we're just going to move on from Forex. We've just been waiting for some people who I know we're going to come to this part of today's sort of extended webinar. And just to remind you, we are going to chop this up, so don't worry. It'll have, it'll be the Forex bit, and then we'll look at some indices and some commodities, some futures and the stocks. So, you don't have to sit through the whole, I don't know, however it's going to be, 2.5 hours, it may even be 3 hours, who knows, depends what's happening in the markets. But just for the benefit of the new people who have joined us, essentially the reason we chose the way of holistic, if you like, is to try and convey to traders, of whether you're a new trader or more experienced trader, the importance of looking out into the broader market, and to get a feel for what the market is fixated on at this particular time, and also look at other asset classes. So we looked at Forex. We have a Forex program where we explain this in great detail. We call it relational analysis. You can call it cross-market analysis. It's really understanding the relationships between the four capital markets and all the way they're linked together. It's not always correlation. Correlation does come into it. And within those markets, there are also internal dynamics and internal relationships. It's really trading in a kind of more multi-level way. If you having one chart, one time frame, and that's where we all start, which is absolutely fine. But you gradually realize that that chart, that price action, is not moving in a vacuum. That asset does not move in a vacuum. It has it's influenced, it's impacted by fundamental news, geopolitical events, etc., etc. And it's really establishing what is the market focused on at the moment. And of course, the market is focused on today is what is happening with the FOMC. This is an economic calendar. It's from Trading Economics. And as I said in the previous session, you really don't have to be an economist to understand this stuff. It's not as complex as you think it may be, but it's really important because this data is absolutely, traders and investors fixate on it, and it's knowing what data is more important. In fundamental data, is you read it a bit like a chart. There's sometimes when it's really not terribly important. Yeah, it's going on in background, and at other times it's the market is really, as I said, more fixated on it. And of course, the backstory at the moment is about inflation. Is there inflation? Well, but you have to distinguish the inflation that the central banks consider to be inflation, and inflation which affects us when we go shopping. And we know, the staples are becoming more and more expensive. It also begs the question of how this data is derived. What is in the consumer prices index that makes it? We had the UK one. In fact, we had the CPI 4. What's the CPI? I think for Canada. Let's go on to Forest Factory. It's probably easier. Here we are. We had this month-on-month CPI for Canada. Well, what is in that index? I mean, we have, what makes up? What do they decide? Is it? I think in the US, it's the cost of used cars. It doesn't include fuel, for example, because they say fuel is much too volatile, and we'll look at the oil price later on. But the oil price has a direct impact on our inflation because the cost of driving the car, it becomes more expensive. But as a trader, you have to kind of put another hat on and be able to distinguish, what is the market concerned with at the moment, and how is that likely to impact what you are trading or even investing it. Now, on the technical analysis side, certainly volume price analysis will highlight whether what you're seeing on the chart essentially is genuine or not, because the other thing you have to bear in mind at the moment, markets are really, really complacent in the sense that the indices are at all-time highs. I know the the Dow's come off a little bit. This is the futures. The S&P is up very, very slightly. I think the Nasdaq is up very, very slightly. We wrote about the Nasdaq a few weeks, some time ago, when it was kind of touched 14,000. We said that is the key level. It actually pulled away from the 14,000. It touched it there. It touched it there, and we've had another touch. Now, if that actually breaks and carries on higher, and you think, well, you know, can it go any higher? As Jesse Livermore said, is nothing's too high to buy, nothing's too low to sell. That will be a phenomenal platform of support. And you know, markets get very nervous when things are at all-time high. So, and what do we look at? You know, where can we go and see? You know, are we going to get this reversal? Well, we look at the VIX. The VIX is falling a little bit. It was 17 earlier on. I think it's been down as low as 15. Once it gets down into these, you know, towards single figures, certainly 12s, 11s, 10s, 9s, if it gets that far, you have maximum complacency. You know, everything is going to the moon basically, and that is when something is likely to happen. What that something is, it's only in hindsight. I mean, somebody wrote that, you know, when we had the financial crisis back in 2008, you know, in retrospect, when people were being given mortgages on very, very modest salaries, they were taking on huge amounts of debt, you know, $500,000, $600,000 worth of debt to buy a home, and there was no hope that you know, they could ever maintain the kind of payment, you know, the subprime, and no one claims to have seen that. And it's only with hindsight you say, well, you know, what were you thinking about? So really, what is going to tip these markets? Who knows? You know, with hindsight, we'll say, oh well, you know, there it was in background, not even in background, it was hiding in plain sight, and we didn't see it. I wouldn't worry about it, because no one ever does. But looking at the charts, and we're going to look at some charts now of the indices, there will be clues there using volume price analysis, and we have called it in the past. We've called it when it hasn't been a top. We've called it when it was a bottom, and that is using, you know, as I said, VPA. Right, so there we are at the moment. I'm only on MT4 today, but I have got Trading View as well, and this is the YM. This is the June. This is still the June contract, David, on the YM, because that's what I've got on. Let's have a look. And the great thing about meta quotes, September, I'll go and change it in a second, is the normally it stops, but it hasn't. Is it allows you to access these markets without having to take out an account with a broker, where obviously with a futures broker, where you know you are maybe having to put down a bigger deposit into your account, and it tracks what is happening in either the cash market. There's a cash version, and then there's a futures version. And really what we're looking at all the time is we're looking at when things are, we've had this all-time high, it hasn't quite made it. It's reached this volume resistance and this price resistance, and we've kind of got a sort of gradual sort of move lower. But what we're seeing is these very, very narrow ranges. Not a massive amount of volume. The anomaly would be if you have price, you know, the spread of the candle very narrow with a ton of volume underneath it, and that is a really glaring anomaly. There's all sorts of anomalies in VPA, and once you get to understand them and see them, then you will spot them immediately, because they will tell you what is likely to happen next. Now on Amazon, there are 2 books of examples of VPA worked examples, and they really do focus on the anomalies, and that is for stocks, indices, commodities, and then there's one for Forex as well. And I know from the emails I get, traders just use them all the time. I mean, it's almost like their Bible, as it were, because once you learn to spot the anomalies, they just jump out at you on a chart, and you think, ha, you're not going to fool me, Mr. Market. I know what's going to happen next. I have a pretty good idea, and if you think you're going to suck me in on this one, go and try your tricks on somebody else. Now, I'm actually going to switch these over, although mine is still working on the 21st of June, maybe hasn't moved over yet. Basically, I have the daily chart, because what the daily chart tells me is the kind of market condition, trading environment that I'm going to be facing today. And oh my goodness, it looks like a razor blade, this one. Why? We talked about inflation data. The highlight of everybody's day today is going to be the FOMC later on, and markets really are not going to do anything until there's been the Jay Powell comes out with his statement, and in the press conference, and really we have to be patient and wait to see what's happened. So I know there was a little move earlier on today, which was very nice, and we pick that up on the Renko. So it's the daily chart, very, not moving, very narrow. We're just waiting, it was 3 minutes onto the cash open, so it's kind of picking up a little bit of momentum. Where are we on the hourly chart? These are my levels for the week. Well, interestingly, we're coming up to the S3. We've almost got a triple bottom here. We've got off this volume support line here, so the market is still wanting to go higher. The differential in the volume underneath here, this is Globex, and it simply reflects the participation levels that you get in the different time zones. So the deepest liquidity is the one where we're coming up to now, obviously when North America joins in. So this is why you think, well, this is all very, very peculiar, but what you have to do is you would look at a faster time frame. So that section there, which is the Asia session, where sometimes it does move, the Asia session. There are traders who trade this. You would read that in the context of the Asia session, but there's a kind of triple bottom there. You've got the it's coming up to the S3. These levels are here for the rest of the week. You've got the volume point of control. These act as sort of magnets, as sort of targets. You also use them for stop placement as well. Then I have a 15-minute, because the values on the 15 minutes are calculated every day whenever there's a rollover. And again, we have the S3. Actually goes back even further. We've got like a little a double bottom here. We had a two-bar reversal here, back to not to the S3, quite to the S2. And this is when we've obviously got the cash open now. We really have to be a little bit careful, because we are going to see an explosion of volatility and volume as well. So taking a trade at this time, just before that, really do have to be err on the side of caution, as it were. Then I have the 5-minute. There we are, off it goes. And I then have a Renko chart. And what the Renko chart, and I'm glad you can actually see the Renko chart, because it not only does it gives you a geometric look at the price action, it actually gives you the insight into the momentum. And by momentum, I mean the speed with which the market is moving. And you only have to look at the timestamp and see how long it took this particular chart to get from from A to B, as it were. And then as soon as you get lots of liquidity, lots of participation, the momentum just takes off, as it were. So I'm going to keep an eye. I'm just going to see if I've got to update this and change it and see what happens. I'm just going to pass over to you, David. Okay. Talking about inflation, we're going to look at the oil price, because that's all I would say about commodities at the moment, they are an asset class. I mean, people invest in commodities, and at the moment, traders, investors, they're looking for anything that they can put their money in, and they're going to get a return. And in fact, I think year to date, I think I haven't got the graph for it, but I saw it yesterday. Commodities have outperformed any other. They've even outperformed Bitcoin, because obviously Bitcoin had a bit of a sharp sell-off recently. Commodities are absolutely roaring forward. Now they're roaring forward partly because it's people have been parking their money there, and partly because of the inflation narrative. Right, I will pass over to you. Is that okay? Right, I'm just going to sort.
Thanks, Sally. I'll just click that off there, move that out of the way. Classic open to, we're on the YM here. I've got the YM on multiple time frames, and it's an absolute classic open. It's what I would always be looking for. The initial candle, this is on 15-second, remember, but we've got the same over on 1 minute as well. A volatility trigger, ton of volume coming in, which is what we expect to see at our time, 2:30, which is when the US cash markets open, and just a great place to short. Just get in there, jump in short, look at it. It's just delivering. Just a wonderful opportunity. I'm on the webinar, so I've missed that one, but that's what I'm looking for at the open. I'm looking for volatility. I'm looking for a trap move, which is contra to what I believe is the general broad sentiment. And the general broad sentiment towards equities is weak. It's not strong, and therefore, you factor that in. You're looking at what's going on in the yen. You're looking at what's going on in terms of risk currencies. Is the dollar rising? I've got the dollar rising quite strongly. The yen has paused a little bit, but certainly we've got some decent dollar strength there as well. So you factor that all together and you put that into a risk trade, and you think, is this a risk worth taking? Absolutely. That's it. We had this was on the 1 minute. Big volatility trigger. We had a volatility trigger to the reverse to the downside, big move to the downside on 1 minute. It didn't on that occasion revert into congestion. It just carried on. We got another one here. We'll see what happens with this one. Maybe we'll get some buying starting to come in, and you can see a little bit of that starting to already happen here. Be interesting to see how much volume we get under this particular candle. The actual wick of that candle, you may not see it, actually goes down to the bottom here of the volume point of control there. So we've got some buying coming in there. So we're expecting to see a little bit of reversal. It's exactly what we're seeing. We've got a potential little area of price resistance here. Looks as though it's going to try and pierce that. That's on the red dash line. We've actually got a cluster of 2 there on the accumulation distribution. So it looks as though it's going to try and pierce that. And to be honest, given what's going on later, what we're expecting to see now is really, this market to really congest in a relatively narrow range, probably move sideways, lots of volatility, and gradually die away as we get closer to the FOMC. But it's a nice opportunity at the open. It's not everybody's cup of tea. A lot of traders would not feel comfortable jumping in on that, but it's what suits you. It's find out what works for you. So this is down to we're down onto the 5 minute here. We've got the 3 minute here. So what have we got on 3 minute? Let's have a look at the 3 minute chart. Ton of volume, what we expect to see. Volatility trigger, huge volatility candle. And on the 3 minute, we're now starting to see that reverse back inside the spread of the candle. We've got the volume point of control here. Monster amount of volume sitting around here, all the way up to the top there. What are we expecting to see? Congestion. And where is this going? 15-second, probably back up here. We've got some resistance over here on the reversal higher now. So we've got some price resistance coming into play here. If we were going to take a trade to the upside now, volume's falling away there, not looking great. But we've got price-based resistance here, and we've obviously got the VPOC up here at 34,180, which almost certainly will result in the price pausing at that particular point. Down onto the 5 minute, exactly the same, big volatility candle, ton of volume. Congestion, moving inside the spread of the candle, what we expect to see. Up onto the 10-minute, it hasn't really closed yet, so hard to say. We've got a big wick to the lower body there, comes all the way down here. It's going to be all over the shop for the time being. Dollar's paused a little bit. Yen's coming off a little bit, which is why we're starting to see a little bit of a rally. Just pull this over with the 4 indices again. This is the yen, remember. So the yen's had a rally, just starting to come off a little bit. This is the dollar, that's had a decent rally, but it's back up to this level again where it was this morning for much of the day. Just pull that out a little bit. There we are. That's on 5 minutes. So, we're back up to where we were, testing that sort of resistance area there. So that's where we are. Let's have a look at the 3 of them on the daily, see if they're all doing the same thing, which they don't always do. It's just a fact of life. We've had a lot of divergence, particularly with the NQ rising. We've had the the YM falling, NQ rising. ES has kind of followed the NQ, but very, very sluggish. The price action is getting narrow. We're trying to break away. We're trying to go higher all the time. And as Anna said, this is the YM. This is looking very fragile. It's rolled over. You've got this arcing effect. Where are we going? Probably back down to the VPOC again. And it doesn't mean it's at a top, but boy, oh boy, it's just looking fragile. Now, whether tonight will give it the momentum, I can guarantee you one thing: you'll get volatility and extreme price action. Whether that is enough to give it the momentum longer term to actually develop into the back into the bullish trend, because you can start to see here on the trend monitor, we're coming out of that bullish trend that we've got on the NQ, and we've also got on the ES. Certainly in terms of the YM, that has actually transitioned out of that phase. So from that perspective, it is looking weak. But we will see. So that's what's going on there in terms of indices. Let's just have a quick look around at what is going on in terms of commodities. Now, oil is pretty interesting at the moment, both from a trading perspective and from a longer term perspective as well. We write about oil, we trade oil, we talk about oil. It's on the site, you can read it there. But in terms of, this is on the weekly, but if I just pop this back to the daily, very bullish. Just reload that. Come on. There you go. It's very bullish. It has been ever since we got a breakaway. 66, this level here at $66.50 a barrel was really obstinate. We were trading there for an awful long time. We had a lot of resistance there. And we said many times that once it broke away from there, you were going to look at a decent bullish trend. And that's what we're seeing. And obviously, commodities, again, with oil, it's one of those commodities. It's helped also. We've had over the last 3 weeks, I think it is from memory, the oil inventories, we've had a draw. So that has certainly helped. In other words, demand has been increasing. It's also helped from a fundamental perspective by the driving season, which is now in full flow in America, where you expect demand to be higher purely because there's a lot of people traveling. And in addition to that, obviously, with a weak dollar, that is also going to add another influencing factor to the whole picture. So it's very interesting at the moment. As I say, that's on the daily. If we hop over onto the weekly, I'll just pull this out probably a little bit. There we go. Just reload that again. In terms of where we're going for oil, we're reckoning about 85 up to this top here, which was back in, when was it, 2018, of around about $85 a barrel. The volume here is falling away nicely on the weekly chart from a VPOC perspective. So we get through to 75, we'll be down onto the monthly. Certainly expected again to get to 75 and beyond. And we're looking for it to get towards 85 as I say, in the longer term. Trend monitor's bright blue is what you expect to see. From an intraday trading perspective, exactly the same, could be any chart, really doesn't matter. Got some buying coming in here. You can see it under that particular candle, through the volume point of control pretty quickly, through this low volume region here on the VPOC histogram pretty fast, up towards some price-based resistance on the accumulation distribution. Remember, these levels are drawn by the indicator. I don't put them on, the indicator does it, and it paints them according to the strength of each level. So the thicker the line, it's like Popeye eating spinach, his muscles get bigger. It's exactly the same here with the accumulation distribution indicator. The levels thicken according to their strength. So where you get these well-defined thick areas, that is a strong region of price-based resistance. It's got a little one above it, so it's got a little cluster there. This is a decent level here too. And then of course you've got the VPOC, the VPOC histogram, which then comes into effect. So where you've got, price-based resistance here, as we're sort of testing at the moment, plus we've got volume-based resistance here as well. Expect congestion, expect the market to struggle, and you want to see higher volume coming in here to drive it through there and on up to 72.40 and 45 and on up beyond. Oops, sorry, click that back out of the way. So, it's very bullish at the moment, oil, amongst many of the commodities, as we've seen this bullish trend. Not sure whether I've still got the Baltic Dry. I won't pull it over, but for those of you familiar with the Baltic Dry, that's been rising quite strongly. It's come off recently, but certainly it's just another indication of the strength of commodity prices, because if the cost of transportation is rising, then so will the cost or the price of commodities also. They will rise, generally speaking, along with it. Just have a look at another interesting one, which is copper, which I've got up the top here. Now, copper is interesting for several reasons. Let's pop the daily one up there. There we go. Copper, as I'm sure you're aware, is often considered, it's often called Dr. Copper. It's considered a barometer of the economy, of economic growth, of demand, because copper is demand. It is required for so many different industries. It is a fundamental base metal for so many different applications. So you tend to look at copper, and I'm not saying it, these correlations don't work. They're not flawless. They don't work 100% of the time. They are just indicative. They can be used. Sometimes they work and sometimes they do break down, but you have to look at them in that context. But like many other commodities, copper's been on a very, very bullish run. And what's interesting about it now is it's starting to come off that bull trend. And the reason it's coming off is several-fold. But primarily, let's look at it from a technical perspective. We had this very strong bullish run high, and then we had this big day here where we had a lot of volume coming in, and the first sign really that it was starting to get a little bit weak, because we've got heavy volume coming in and the market is unresponsive. You've got a big wick to the upper body and lots of volume. So what is that telling you? It's telling you there's quite a lot of selling going on in there. Now, it's not a great surprise given the strength of the trend, that there's an awful lot of people cashing in, getting out, taking their profits off the table, which is fine. So there's a ton of volume gone in here. But then we start to see it break down, and you start to see this weakness come in. You start to see heavy selling under this particular down candle. Market tries to rally. You get more heavy selling under this particular candle because the market's tried to rally. Lots of volume being driven into the market. It's just not going anywhere. It's just unresponsive. So we had more selling coming in here into congestion phase, bit of weakness here, trying to rally all the time. Bit of price-based resistance overhead. And then yesterday we had a big down day. Lots of volume. So volume and price are in agreement. So this is heavy selling pressure in terms of copper. Where is it like to go? Well, and in addition to that, it went through this low volume node very quickly, which is what you expect to see. Where is it going short term? Probably down to the volume point of control, down at 4.1, 4.15, this sort of region where you expect to see congestion build accordingly. So that's the kind of technical picture. From a fundamental perspective, what is driving copper right now is very much from China, because what China have done is that they have insisted that their state-run organizations reduce their demand for copper from overseas and actually use some of the stockpiles that China has itself. And that is a diktat which has come from the state. So these state-run organizations are having to use copper from the stockpiles, so they're not buying copper. And hence, that is another reason that you're seeing this. Now, obviously, if we see the dollar strengthen, then again, that is going to be another factor in terms of a move for copper. So we've had this very strong run, indicative of strength in, risk assets, strong markets, demand, et cetera, et cetera, et cetera. Now we are starting to see that roll over. And if you overlay that with certainly the YM chart at any rate, Everything is starting to look a little bit fragile, and if you overlay that again with inflation worries and everything else, you start to put together this complex, this puzzle of pieces, which form into potentially, where we are reaching quite a significant area in terms of risk. So that's copper. Always one to keep an eye out. As we say, we call it Dr. Copper for that particular reason. Gold, of course, really we're looking at from an inverse perspective in terms of what we expect to see for gold, because gold is going to be a major beneficiary. If inflation really does start to take hold, then gold is going to see is one market particularly that you will see benefit hugely from that, purely because it is a hedge. It's used primarily, certainly from investors at any rate, as a hedge against inflation. So you will see gold start to be bought. It's been pretty bullish, like many other commodities. We've seen a bit of a reversal in the last it had congestion, last reversal in the last few days or so. Some buying came in this day. We've had a little bit more selling. It's now moving into congestion phase. Got a low volume node here, which is a little bit worrying, but longer term, we are bullish on gold, primarily for the reasons of inflation. Silver is pretty much the same. Where are we with silver? I've got silver open. I'm not sure I have actually. No, I haven't. I'll come back to silver maybe. But I think that's pretty much it on commodities that I just wanted to cover for you. Now let's just go back to the three of them, see where we are. So this is on the 5-minute on the top line and daily on the bottom, trading in a narrow range, trading in a narrow range, trading in a slither. It's what we expect to see. I'm just going to pass back to Anna.
David mentioned about we've got this divergence between the main indices. In fact, there are now 4 indices that we look at, and the reason we've included the 4th one, which is actually the Russell 2000, is because we're looking at stocks more and more, and this is the small caps. This is the sort of it's where investors in particular want to find companies that will be the next big thing. And what's interesting about this particular index is it's going to be rebalanced at the end of this month. Now, this is where the meme stocks have been living up until now, and it could be GameStop is going to be promoted to the to come out of the small cap to go into the larger cap companies. So it's a really important index, but it's also important for risk, as it were, because when the market is prepared to take on more risk, then money will be flowing into more speculative assets that are more volatile, assets that that are speculative. There's no guarantee in trading and investing anyway, but they are more risky. They're startup companies, and it's interesting that this is the daily, and it has. Let me just scrunch that down a little bit so we can have a look a little bit. There we can see. That's its high, 2367. It's had another run up here at 2350, and again we had a weakness in on Monday. Then we had an effort to rise. We've certainly got some buying coming in, but it's looking isn't looking particularly healthy at the moment, as it were. Going over and looking at the YM, that's come off. We can see the S&P futures as well, but the Nasdaq is kind of doing its own thing. Where are we? Yeah, not by a huge amount, but it's really interesting. We've called this session kind of holistic because it's looking outside just the immediate index, as it were. Well, if you join the dots up with the Nasdaq is growth, is tech stock growth, Is it kind of telling us something about, you know, what's coming up with the FOMC? People are still buying growth stocks. They're buying tech stock. Does that mean that you know, these kind of stocks, they don't do very well in an inflationary environment, whereas the YM, they're more kind of value, they're defensive stocks. So maybe the indices are kind of telling us something. We won't know until the FOMC itself, but it's how you look at all this information that is out there. And now, you know, you could say, well, what's that got to do with, you know, the index that I'm trading? Well, what it's got to do with is understanding, as I said, the relationships between them, and when there is this divergence, there is a reason for this divergence, and it could be signaling something that may, you know, coming up and happening. Now, what's interesting with the price action on the Nasdaq, this is actually the cash version. So I haven't got the futures version, but it doesn't matter. This is what I'm saying. If you use meta quotes, it will allow you access to all these. You can trade copper, you can trade, you know, a myriad of markets. But isn't it interesting that this has obviously been the open? We've had a ton of volume going in. We've had the volatility candles. We did have a retrace into the candle, but it's still sort of powering higher. Now, what we need to see, of course, there's always this inrush of volume, so it is slightly distorted. But if this is going to carry on and it's going to motor higher, it's still going to have to, you know, people are going to have to, it's going to be buying coming in here. And this is where we see, you know, waiting for any anomalies. This is the daily chart that we can see. It's, as I said, it has met this resistance, this volume resistance that we can see up here, slightly above. I think it's over its all-time high, just about peaked over. Yesterday was a bit of a pullback day. It's trying to have another run up. I think without the FOMC, we would certainly see something, you know, probably a little bit more spectacular. But going back to levels now, what's interesting is we had this period of congestion that we normally get in, you know, when first of all we get a congestion before the open. This is the hourly chart, but this congestion has been going on for some time. It's very, very narrow ranges, but you know, it's when markets are at all-time highs, this is what you expect. Investors are nervous, traders are nervous. There's always a wall of worry, but what's fired off now is a volatility candle, and it's also hit the R3. So we'll have to wait until, well, we've got another few more minutes here at 3 o'clock. We'll see what happens with this candle, whether in fact this will prompt the usual, which is a reversal back. It is a strong, you know, the R3 is a key level on the Camarilla principle. It's also hit the R3 here on the dailies as well. This is the Renko. This is the pre-congestion. In fact, it's kind of been drifting higher ever since it sort of came off this sort of down here somewhere on the S2. That was very late yesterday evening. But you know, it was kind of mildly bullish, but occasionally, you know, it wasn't sort of solidly blue, which is what we expect. What we want to see is solid colors, and we want to see a match between the trend dot and the monitor. But in terms of an entrance using the Renko chart, levels, the confirmation of color between the trend dot, which is very, very close to the price action, and the trend monitor, and then using the levels as targets, as it were, as price objectives, and to help you hold a trend and hold a move. But for exits, I would actually look at the time chart and see what's happening. Now, what's interesting is it's gone through the volume resistance at this level here. Now, when that goes through, you will see the VPOC carries on, if you like, printing histogram at the back, and that tells us that there is potentially some more upside, because what you want is if there's going to be a resistance and a reversal, you want to see one of these volume bands come up. It kind of caps the top of the VPOC as we have it. This caps. This is the bottom of the VPOC here. That hasn't produced a top yet, or you go to another time frame. Let me just move that to 15 minutes to see what that says. Let's see if there's a, yeah, it's gone through there as well. Let's have a look at the hour. Let's have a look. Right, on the hour, that's interesting. It's actually come to a volume resistance here, and we've got the volatility candle. So it's a really interesting point with the NQ, but very much contra to what we're seeing on the Russell, what we're seeing on the YM, and I think what we're seeing on the S&P 500. So if you if you trade this, you have to keep an eye on what is happening on the other indices, but except that you do get these divergences. And talking about other asset classes that to keep an eye on, let's see what bonds are doing. We haven't talked about bonds in the session so far. It's the 10-year that you want to, oh, looking at the wrong one, beg your pardon, that's the UK one. Have a look at the bond, the 10-year treasury. Let's have a look. Let's have a look, 10-year. Yeah, that's, we've mentioned it in the past that 1.5 was the kind of, it's kind of benchmark level. It's below that now. It's spiked up to 1.6. That's also telling us that markets are quite complacent as well. And obviously the VIX, let's have a look at the indices, let's see what's happening with it. Although the VIX is more directly connected with the S&P 500, there is a VIX for the NASDAQ and a VIX version for the NASDAQ, and there's also a VIX for the YM. There are volatility indices for practically all instruments and markets. So I'm just going to keep an eye on the NASDAQ, see what happens. There's obviously, a lot of positivity in this particular index, but we are at various key resistance levels, both price-based and volume-based. And in fact, on the 5-minute, this is what happens with the VPOC. You see that was being printed. This is a dynamic indicator. These things happen in real time, but it's now posted this resistance. And in fact, as I said, because it coincides with the R3, I'm just waiting literally a couple of minutes to see what happens, because that's critical, and it will be reflected on here as well. So that was a little burst of activity going higher. Is that the potential for a short? You really have to be a bit patient, see what happens. It is out of step with the other indices, so maybe a short will present itself. Personally, entries, I would wait to see what the Renko comes up with. So I'll pass back to you, David. Is that okay?
Hi everyone, back on my side, back on Ninja. Just move that out of the way. Just want to see what's going on in terms of the dollar over on TradeStation. Still a bit mixed, not really giving any direction across the currency futures. So that's where we are in terms of the dollar. And in terms of the three of them, certainly these three indices at any rate, they are now all trading, other than the NQ, which we've had this rally. The volume is falling away, but then you've got to remember, from the open through to, I don't know, 3 o'clock, let's say, where we are roughly now, our time, you're always going to see an attenuation in volume. You're always going to see an initial surge at the open, and then gradually that will die away, because the market it's like the floodgates opening, and in they pour, and then gradually the market settles. Yeah, it's like It's like opening the pub. The pub doors open and everyone piles in. I can think of other analogies. Probably another one would be if you go to a big performance, a big concert, a big opera, a big anything, everyone waits in reception, the doors open and everyone floods in. It's a similar sort of thing here. That's what you see. And then gradually it all settles down and, you get into the trading session, et cetera, et cetera, et cetera. Lots of volatility always. Big long-legged doji candle up here. Does that mean a reversal? No, all it means is indecision. It is indecision only. It's not a signal or reversal. It just means the markets are in congestion. The battle between bulls and bears in there has been equally weighted, little narrow body in there. So, it's indecisive. It's as simple as that. It doesn't mean per se there is going to be any sort of reversal from that point. This is what the YM's doing at the volume point of control. Not a lot going on. Volume falling away again, but then, it's what you expect to see. Not really going anywhere, and exactly the same with the ES. Really just flip-flopping around. Everyone's waiting now for the next 3 or 4 hours to pass, and then, the big event will come out. Just to, do you want me to pick up a couple of stocks here? Or do you want to pass back to you? No. I've got several stocks up here just to okay, we'll keep an eye on the indices. I'll just keep an eye over here in terms of what's going on in terms of the yen has come off. It rose initially, but it's now going kind of sideways. The dollar's moving sideways as well, so that's really not going anywhere particularly strong. Had a bit of a rally, come off. Pound's going sideways. Euro's trying to have a bit of a rally. So they are all in sideways mode as well. This is GE, and the reason I wanted to show you. Oh well, there you go. We both got GE. The reason I wanted to show you GE was you can find a lot of these on Anna's site because we write about them over months, sometimes over years. I mean, Caterpillar we've written about for over years. We write about these. They are not suggestions to buy or sell, but they are our views on where these particular stocks are going, opportunities available, etc., etc. This was on the daily. GE is a stock we know very well. It's one we've traded very heavily. We also know the company because we used to use them a lot in another life. And what was interesting about the daily chart for GE was this spike on the daily where we had a big volatility candle, lots of volume came in. What do we expect to see? As always, some either congestion or reversal. In this case, we've got a reversal. Where are we going back to? We're going back to the volume point of control down at $13.20 a share. And bear in mind, GE used to trade anywhere between $36, $40 a share. So it's been absolutely hammered over the last 4 or 5 years, 10 years, whatever. It's really been hammered fundamentally and also technically. That said, there are opportunities with it. Now on the daily, bear in mind this is only what, $1 or so from here to here. So that was to be expected with that particular trigger and that particular volume associated with it. Sorry, but if we move it over to the weekly chart, let's go and have a look at the weekly. Okay, the weekly chart is interesting because we've had this bullish run, quite an extensive bullish run. This is not a stock that's going to set the world on fire at the moment. But nevertheless, if you're trading this intraday or you're looking for a stock as an investment, a longer term investment, this is certainly one to consider. We've had this decent run. We're in congestion, but the interesting point is that whilst we had a volatility trigger on the daily, the important one here is the one on the weekly, because that really sets the level. And I think it's the level we highlighted in the post we did, that really what you're looking for now is you're looking at, yes, a potential reversal from this point, but if we can break through 1450, just ease this over, and it gives you some perspective really on what we're looking at here and what Anna and I are always looking for from a stock investment point of view. But also from an intraday perspective, you're looking at opportunities where you've had a stock that's fallen, maybe moved into a saucer shape. You see the buying coming in, you see the accumulation coming in, and you're looking for that opportunity for the trend to begin to develop into a new campaign as the market makers absorb. It's a very simple process in the context of what happens is a price falls into accumulation. The accumulation is absorbed over an extensive period of time of congestion, and then it comes out the other side into a bullish trend as a new campaign gets underway. And there's obviously loads of tests in there as well, which we cover in detail in the program. Won't go into that now. But what we're looking at in terms of G is really this level here, because it's so clear where that level is. It's at the sort of $14.25 per share. And if this stock can get through there, then you have the potential, I'm saying it will, but you have the potential for it to go quite a long way higher, assuming it is supported on volume down here. That is the key point. It has to be supported on good, solid volume. But from a pure technical perspective, and ignoring the fundamentals, ignoring earnings reports, all that sort of stuff, just looking at it from a technical perspective, that's the sort of thing that we get excited about. You look at that and you think, okay, great. You've got to be patient. You've got to wait for it to break, but it's got to break on good volume. And if it breaks on good volume, boy, you've got a really nice platform of support then in place, to really drive the share price higher. But bear in mind, you were going back to, where are we over here? That's 2019, this is 2017. So this is, a 4-year period in here that this has been absolutely waterlogged, really hammered, come down into this region here. We've been in the congestion phase for a couple of years now, and now potentially we're seeing the opportunity for that to rally out of that congestion phase and, develop a decent trend. Intraday, it's the same sort of principles, but that is the process on a longer term perspective. I'll just pop that back to the daily. So I just wanted to highlight that one for you. Really nice example. One that we've looked at many times, certainly over the last 12 months or so, is one called Iron Mountain, which I think I've got up here as well. Wait for that to load up. There we go. There we go. That's on the daily again. And this was one we picked up when I think it was trading around $23, $24, $25, something like that, way down here, back in the middle of last year somewhere, I think. Similar sort of thing. Yes, we had a lot of volatility. I mean, whenever you get earnings seasons, you're going to get volatility. You're going to get things happening with share prices. You're going to get mergers, acquisitions, all sort of things. But this has still delivered. It's up now to 45, and it's got to 47. Probably more to come. It's in the data management storage. That's the type of market, but it's a really nice stock. But from an intraday perspective, you're looking at it exactly the same way. A little bearish at the moment, and that's partly because markets are pretty weak. But they will be waiting for what goes on later. Just one other quick one, I think. If I can find it very quickly. Don't think I've got it here. No, I haven't. Let me pass back to Anna, and I'll see if I can dig that other one out. I just wanted to show you. Yeah, can I pass back to you? Yep.
It's back to bubbles. All right, I know some of you may not have seen this, but I'll show you in a second. But before I do that, something quite interesting. This is Financial Juice, but you'll have, whatever news feed you have, I hope you have a news feed, because this is Janet, making a comment ahead of, is she... Find it quite odd with Janet Yellen, actually. I know she was a Fed chair herself, but she does seem to be straying into territory which traditionally the Treasury Secretary hasn't in the past. Doesn't mean she can't do in the future, but I would have thought, from market perspective, best to wait at least until the Fed this afternoon. Anyway, but what's interesting is what Financial Juice have done now, which is great, but it's also it kind of puts under here where these comments are likely to have the biggest impact, and this is what we're trying to explain, that nothing moves in a vacuum. US indices, obviously the US dollar and the US bonds as well. And it's quite interesting. This is another headline: big banks and small caps. Small caps will be the the Russell are battered ahead of the Fed. Now, big banks being battered, you would have heard us in previous sessions say, well, why banks, their product is debt. They make their money on a rate. They charging you an interest rate. So if they are getting battered, then what does that tell you possibly about what's going to be happening later on? And it could also explain why the growth stocks are, why the Nasdaq is doing, it's doing well. It's not moving fast. As I said, it reversed into the spread. Has gone through the R3, but it's slow. It's grinding higher. We had this little bit of a burst. Is there a reversal? No, because the this is what the Renko does. This is when you use a non-time based chart, such as a Renko or a tick chart. That's what it does. It holds you in, but it also gives you a sense of the momentum. Now, if this was fast moving, these little bricks would be, they would be coming out at like a machine gun, basically. It's a kind of steady move higher, and it seems to be at variance with what is happening with the other indices. That's the way the markets are at the moment. They are all a little bit all over the place, as it were. They're very changeable. They're very mutable at the moment. You have one day up, one day down. You only have to look at the candles. On some of the daily candles, and you can see that up, down, up, down. You just have to accept that this is what happens on certain, at certain times of the year and under certain circumstances. It has pierced through this resistance. It's actually pulled away from it, but it tells us that this level here is critical, and it's critical for three reasons. Firstly, on this time frame, it kind of corresponds with what's happening on the Renko and also with the hourly. But what the Renko does more than anything, it really, as I said, I can't stress enough, it helps you to stay in a move. You just then have to keep a very close eye on what is happening on the time chart for your potential exit, and where this is likely to be going, because it's a long way on the hour right up to the R4. It's a bit of a trek going up there. So you come down and you think, well, that's up here. You have to go through the time frames. I don't have huge numbers of time frames on MT4, which actually suits me. It's more than enough for what I need. You just keep, you keep looking, where are those zones, where are those areas, what is happening outside the ecosystem for the Nasdaq, as it were. Just keep an eye on things that are being said. You won't hear anything from the Fed because they're in purdah anyway until the release this afternoon. And the market is, it's positioning. Traders are doing exactly the same. They're looking, what's the dollar doing? What's the yen doing? Are they buying the yen? Are they selling the yen? The yen is a proxy for risk. Well, what are the bonds doing? Bonds aren't really doing very much. Oh gosh, the banks are selling off. What does that mean? Well, that means, there's no interest rate rise. Well, certainly not imminently, but, maybe next year, or maybe 2024, they're talking about, 2023. There's plenty of time to, for risk assets, if you like, to move higher. What's happening in the commodity space, what's happening in oil. Oil prices going up they tell two stories. They tell us that there's more demand, but there's also more demand. Maybe if there's a problem with supply, that's going to drive the price higher. Yes, it's going to feed into inflation, but as I said earlier, some energy costs aren't necessarily calculated in the in the index that is constructed for making decisions about inflation. So it's all very circular, it's all connected, and I do assure you, I know it can seem awfully overwhelming. It does come together, and it will make sense. It will start to make sense to you. So we can see here, the nice thing about the volume point of control is that, because as it says, we thought this was going to be a resistance. It didn't. It's pushed on. It creates another one. And we look at the volume. Is that enough to push that through? We're always looking down here. Is that enough? And, you know, is that enough to push that through? Are there, you know, are there buyers waiting up there to take it further? We haven't included in this session time and sales, or level 2, the order flow basically. But in the future we will be looking at that more closely to really tie them into together. I mean, the level 2, the orders that are out there, they're standing orders. They're people, you know, they're traders who possibly may be looking to buy, possibly looking to sell, but there's an awful lot of spoofing going on. So, you know, you have to kind of look at them from not just saying, oh well, there's lots of bids there, right? You know, the price is going to go high. Oh, you know, what's at the ask? No, you can't see it in a binary way. It's much more subtle. But time and sales, David has time and sales on the trade station. That are orders that have gone through. You know, there are actually executed orders, and in a way, I think time and sales are almost more important, aren't they, David? Yeah. I mean, the others are just, they're interesting levels. And you know, I've been sent links of YouTube videos from, you know, of you know, very distinguished sort of traders and companies that are teaching you know, prop traders and what have you. And I have to say, the word that is you know, is characterizes all of them is volume. They all use the volume down here. Oh well, the volume's not very much. You know, what's the volume at the open? Well, you know, it's not very much based on the kind of volume that this is on stocks basically. Or, you know, it's a bit low. I don't think that's going to go very far. They kind of almost absorbed the lessons and the concepts that are in the book, which is fantastic. You know, the more traders who do that, you know, the more power that we will have as traders, and you know, the less likely is that we will be caught out and, you know, and the money taken away from us basically. Right, so that's what the NQ is looking on the cash. GE was mine, and the reason I chose GE was not from the perspective that David was looking at, because, you know, we've been looking at, well, how do we choose a stock, and for specifically for trading on a short-term basis. And this was really interesting because, and this is using the volatility candle on the slower time frames. This is on the day. This has been, as we can see, it's been in this congestion phase, which is fine, which is actually great for covered calls, which is why we held GE for so long. This is what we wanted to see. We wanted to see a congestion, a mildly bullish tone to it. We would write calls, take the premium, and, you know, we were never, I think we were exercised on GE, David. No, weren't we? No, we were never exercised on GE. So it was great. You know, it wasn't going very far, but, you know, we wanted to hold the stock, and we were getting like a rent on the share. So that was fine. But what's interesting, it has this gap up, and in doing so, it's actually triggered the volatility. And what is interesting with the volatility, given what can happen more than not, is actually using it as just say, okay, I've had the volatility. It's, you know, it's unlikely to go, you know, shooting higher. It's had this momentum. It's going to calm down. Maybe I can use it to actually, on an intraday basis, look for a short. And it's been an absolute joy from that perspective. Again, I've got 5 charts. I've got the hourly chart with the levels. I've got the 15, and in fact, it's open gap down today. And if we look at the, in fact, if we look at the time chart, we can actually see it ended up on a day. There was like a little, you know, where did it stop? It actually stopped at the R1. It opened gap down, but once it got to that you know, that third level, then, you know, there was an opportunity there for a short. There was some buying that came in yesterday. If we look at yesterday's candle, there's a little tail to the bottom of that candle. reasonable amount of volume coming, but it's still looking a little bit weak. Where's it going back to? Well, we've got the S6, but we've also got back to the volume point of control. So it's not, don't be surprised if this actually gets back to the VPOC. But it was just, we're always looking for different ways of selecting stocks. This is purely based on a technical signal, and that is on a it has to be a slow time frame, has to be something like the daily chart, and it's not dissimilar to what we have seen on Bitcoin. This is Bitcoin. It is still within the spread of this big volatility candle, and these are the levels that are key for Bitcoin. And what's really unusual with Bitcoin at the moment, it's been with, you know, up until this candle and this sideways, this is so untypical of Bitcoin. And you know, from what I've read on Twitter and what have you, it's causing a lot of frustration, because especially traders who've come in recently to this into this market, they're not used to this. They're not used to this. They're used to seeing this, you know, jump up in leaps and bounds. Right, I am going to very quickly. That's fine. Okay. Well, again, any comment on cryptos? Very quickly. Where are my bubbles? My bubbles. In case you missed it a couple of weeks ago, FinViz, fantastic site, has got this wonderful feature whereby you can you can choose sectors. Let's have a look. This is what have I got? Here we are. You can either go in from any index, and I've chosen, and I've actually chosen real estate because the chart I chose was from was a real estate. Real estate has been a really good sector so far. The housing in the States is, I believe it's in a bit of a, you know, it's a bit of hot sector, hot market at the moment. People moving and what have you. So a lot of the charts you can see here, they've been in very strong upturns. If you look at NSA, but the reason I like this is because it allows you just to quickly hover over and just think, great, you know, go and SB, I don't know who SBAC are, but you know, the chart looks interesting. It's been in a fantastic trend, as we can see here. It's got a capitalization of 35.11 billion. And you know, trying to find these stocks, certainly from a chart perspective, it can be very tedious if you have to laboriously, you know, load every, you know, each an individual one. And you can refine it even. You can go into their, you know, you can go into much more finer, filter it. You know, however you want, and you get these lovely bubbles. You've got the market cap, etc. You've got average volume, etc. What I mentioned last time is basically what I would suggest is when you're looking for, say, on sectors, if you like, say any sector. Let's go back into real estate, because that's where I went into. Where's it gone? Real estate. The one factor I would do is I would look at average volume, otherwise it's too much. I would go over 1 million. That's it. And then you haven't got quite so many. And the same charts came up. And the one that I came up with was this one, was called Vici, which was quite a nice, where is it? That one there. I really liked the look at that. It's had a run up. Now it's gone into a congestion. And the next phase is to go into, I will actually put this into some kind of, we'll do a slide on it so that you'll be able to take the steps, as it were, that we would suggest you do. If I go to Market Watch here, nothing's moving very quickly. My tabs are frozen. I think I'm frozen again, David. Oh, there we are. Here we are. Right, here we are. Beachy is go and look at the background to the stock. You can do this on FinViz, but this is really good. Have a look at the institutional ownership. The options chain is really interesting. Those who've come before, AHT was one that I was following based on the option chain. I don't think this is going to load very much. No, it's not going to come up. Okay, I think I think it's run out of energy my system. See if what the market is thinking, whether it's still bullish or bearish, because this is the options are being used more and more by the retail end of the market. And just to give you some figures, 91% of single stock options traded on this Monday were all calls, because everyone's long everything at the moment. 70% of options had an expiry of 5 days or less. 88% had an expiry of 10 days or less. And in fact, I hope, because there are so many retail traders have gone into the option space, the regulators, I hope they're not going to start being silly and saying, no, we've got to keep you out of there, because these activist traders, the Reddits and the Wall Street bets, they are having an impact on Wall Street, probably the first time ever, which is fantastic. I don't blame them. And they're calling it kind of call mania. Well, I hope they've taken their profits, because the meeting this afternoon is really the result of what the Fed is going to say. I hope they're not going to upset the apple cart. I don't think they will at the moment, but you never know. And it's the kind of information that you do have to start putting together, when you make a decision about stocks, whether for trading or for investment. So the parameters are identical. The only difference between trading and investing is basically how long you're going to hold stuff, and that's it. Right, I'm going to end with the NQ. Well, it's certainly let's have a look. It's this, it's kind of peeking through all the time. All our indicators, we haven't really talked about our indicators very much, but because we like just to show them working on the chart itself. They are what we call dynamic. We try to make them so they happen in as close to real time as possible. The volatility is triggered in real time. Once that parameter is met, that's the ATR, that's it. It fires. There's no waiting for the end of the candle or anything like that. The VPOC resistance and support levels, they are created in real time as well, and as is the support and resistance. This is the solid one, and it will change. It's important now, but it may not be important in 2 hours time, as it were. We will have to see. So as I said, it is trying to move higher, but it's a bit of a struggle, and we know that because since we've been, it's sluggish, but there is a reason for that. Right, can I just pass back to you, David? Is that okay? Pass back to David. Thank you so much. It's been a bit of an unusual session today. As I said, it's all going to be chopped up into individual videos. They're going to go up on YouTube. I don't think we've got any questions. Let's have a look. Let's have a look. Have you done anything? I entirely agree. I entirely agree with you, Keith. You're pushing an open door. If you email me, I'll tell you a little bit more about it. It's I've had to learn all this stuff because I'm studying GAN at the moment, and that's absolutely part and parcel of what I am doing. So it's great to have a fellow traveller, as it were, in that in that field. Anyway, I'll catch up with you in next week. We're back next week, and maybe a different session. We will see what happens. Anyway, I'll pass over to David. Enjoy the rest of the trading day. Let's see what Mr. Powell says and does. And these markets, they never fail to keep us on our toes, as it were.
Hi everyone, back with me. Anna mentioned time and sale, so I thought I'd just pull it up. I've actually got the NQ here. This is on the next contract, and I've got the time and sales window down at the bottom here, which is rolling through. All these are executed contracts. These are not pending order contracts. These are, you can see huge numbers, 162 went through. These are the sort of numbers you're looking for. But essentially, this is time and sales. So this is contracts that have gone through, been executed, real orders. And you look at that in the context of where that order, first of all, the size of the order. I'm not interested in the ones and twosies here. I'm interested in those 162. I'm interested in anything over more or less 50 or 60, something like that. You know, big blocks that are going through, whether they're going through at the bid, at the ask, between the bid and the ask, and how that then duly impacts the price action over here on the chart. I've got the 5-minute up here. I probably have this running on a quicker chart. If I was trading off the time and sales, I'd be trading this on a 1 minute, probably even down to 15, 30-second type charts. What I've also got up here, which is just another great visual way. And by the way, this is being driven. This is radar. This is TradeStation Global, which is TradeStation 9.5, driven by my interactive brokers account. So the IB account is linked directly through. It is providing all the data. It's providing the time and sales information and driving all the indicators. And in addition to that, up here, I've got the radar screen with, I've got the trend monitor, I've got the trends again, and I've got the volatility. Exactly the same setup as on the currency futures looking at earlier on. But what's not, I've got it, as you can see, I've got it set over the fast, right the way through a whole array of timeframes. And what the trend monitor gives you, it gives you this great visual perspective. Sorry, I've got 2 1-minutes up here for some reason. Just starting to see on, for example, if I click this over onto 1 minute there, you're just starting to see the transitional phase of the trend monitor come into action. And if this is going to develop into a meaningful trend longer term, and by longer term, I mean down into sort of 3, 4, 5, and 10-minute and 15-minute and so on. First of all, you're looking at transition the trend dots, because the trends always changes first. The little trend dots here will always change color first because they are much closer to the price action. So the first thing that changes the trends, and then the trend monitor. So if we ignore the first one because it's the same as the second one. So you've got the trends here changed into the trend monitor, which has changed to red. Then you've got the trends changing on the 2-minute. The trend monitor is in a transitional phase on 2-minute. It's gone to a darker blue. In other words, it's come out of bullish and it's starting to transition into a potential reversal through to red. So it might go dark blue into dark red and out the other side. You can't always be certain because it doesn't always follow that pattern. But certainly on the 1-minute time frame now, you can see we've got the trend monitor, nice bright red, trend dots above, they've all gone red. They're pushing the price action down. And this is now transitioned through on the 2-minute to a darker blue. So we've come out of bright blue and we've gone to dark blue. Now, if this transitions much more strongly, and now you see we've got a similar sort of thing on the 3-minute. So if I click on the, where are we, the 2-minute, that one. Let's get rid of that for a moment, sorry. That off the screen, there we are. Now we're on the 2-minute. So now we're starting to see that transition here. We've got our first darker blue, which is here. We've also got that on 3. Again, we've still got the trend dots here red. We've got the trend dots here red as well. We've got no meaningful volatility candles in the recent past in terms of these particular timeframes at any rate. And we're just starting to see that develop. Obviously, we'll be looking at the volume. We'll be looking at, what have we got in terms of volume profile? Well, we've got some lower volume here. It's not, it's not a low volume node as such, but it's falling away. So, for the market to fall, remember, in falling markets, you've still got to see rising volume as you would in a rising market. So it's just a very simple workspace. It uses the power of radar screen to give you this great visual. You've got the time and sales window here below, which gives you a straight heads up. All this stuff here going through at the moment is of no interest. It's all small, it's all onesie, twosies, fours, fives, that sort of type of volume. You're looking out for a real big chunk of volume to go through, and you're looking at whether it goes through, where it's gone through on the price action, and thereafter how that is then related in terms of how the price reacts to that big chunk of volume going through in terms of orders, and how the market responds to that particular order phase. Just keep an eye on this for a moment, just see where we're going, to see if we can get this through to a, we're still in darker blue, haven't come out the other side yet. We're on the 2 minute, remember. So, you know, we're still in, we're getting this little downtrend develop. We're coming down to a larger lump of volume here, so we might expect the price action to pause there. Let's go back onto the 1 minute for a moment. Let's click that. Come on. Okay, yeah, okay, there we go. I don't want to know. So stay with the 2 minute for a moment. But we're just starting to see that transition now. See if we can get up to a slower time frame. Let's go up onto 5. Come on. Should be linking over. It's not at the moment. I don't know why. Anyway, I just wanted to show you that workspace. It's just a really handy workspace. I'll say this is TradeStation Global, driven by the Interactive Brokers account. And it's just a really nice way to see everything in visual. I'll just move that out of the way. And here we are back on the, this is basically what we were looking at there. This is on NinjaTrader on the 5 minute. You know, we had this weakness come in, effort to rally, you know, we've got effort to rally here, more effort to rally here, effort to rally, falling away. And it looks as though it's coming all the way back. In terms of, we've got a decent amount of, let's have a look, quick look at yen. We've got the yen selling off quite strongly, actually. The dollar is really going nowhere. But it's really the yen that's moving. The euro is rising, but it's really the yen that's kind of driven this move so far. So it'll be interesting to see if that continues through, or whether we're just going to see congestion follow into the FOMC later on in the evening. That's it. I'm going to wrap up there because we've been going way over time. Sorry about that. It's been a long session. I appreciate it. So really do appreciate you being with us for, if you've been with us for all the time, congratulations. Hope you've enjoyed it. Hope you've perhaps learned something that you didn't know before. This is where you'll find all the bits and pieces. This is quantumtrading.com. This is where you'll find all the indicators, MT45, NinjaTrader 7.8, TradingView, and TradeStation. The licenses, always remember the licenses for MT45 is one and the same, so you can do both, use both platforms. Don't need to buy another license. The same applies to 7 and 8 on NinjaTrader. You decide which platform you want to use. It's covered by the same license. TradingView is extremely popular at the moment, selling a lot of indicators on TradingView. It's a fantastic platform, great volume, and you can trade a lot of markets. You can also hook your account straight through. I've got the little FXCM on there. I'm going to hook the TradeStation on there, and then 1 or 2 others as well. So you can literally trade off the screen. It's just a great way of trading. You can buy one indicator, you can buy a bundle. We've got special deals, all sorts of things. But whatever you spend with us, you will always have a credit for that if you want to upgrade to something else. If you buy one indicator and maybe decide later that you want to invest in the full package, or you want to upgrade to a currency dashboard or something like that, then you always get a credit for what you spent with us. So you never lose out. And you can always transfer from one platform to another. Again, we don't charge for that. Some companies do, which I think is outrageous personally, but there we are, only my personal opinion. We don't charge for that. All you pay is if there is a difference between the platform per se, because you know there's a difference in price between MT45 and NinjaTrader, because NinjaTrader offers tick history and tick charts which aren't available in MT45. In the same way on TradeStation, you've got radar screen as well, so you've got another raft of indicators. So those are the reasons there are differences in prices. So when you upgrade, you just literally pay us the difference, and then we enable you for all the various indicators accordingly. And remember, if you invest in a full package with us, then you also get all future indicators we are developing. So if you're on the TradingView and you have the TradingView full package at the moment, you will actually receive the cryptocurrency indicators we're developing right now. You'll get those free of charge. We've always done that. It's just the way we work. It's just our way of saying thank you to you for investing in a full package with us. It's as simple as that. And I have to say it's extremely popular, and customers who've been with us since day one, they've got a whole raft of indicators which they've never paid for, which is great. That's wonderful. So that's where you'll find all the indicators at quantumtrading.com. And it's all covered by 24/7 support, and it is literally 24/7. We man the help desk 24, literally 24 hours a day, 7 days a week. We are always there at weekends, which is, again, something we've always done. We take customer support incredibly, it's incredibly important. It's the core foundation of what we do, as well as obviously delivering great products. But, we believe we support those to the best of our ability. This is where you'll find quantum trading education, the Forex program. It's called the Complete Forex Trading Program because it is just that. It took Anna and I 2 years to put this together. It wasn't done in 5 minutes. We put a huge amount of effort and thought into what we believed that you as a potential Forex trader needed to understand about this market in order to trade it with confidence. That's why we spent so long putting the program together. That's why it's so comprehensive with all the various modules. I think at last count, there's over something like 450 lessons and something like 250 to 300 hours of video in here. In the back end of last year, we bolted on the Forex funded program, which means that once you've acquired all that knowledge, you can then trade our money at no risk to yourself, right the way up to $2 million. It's as simple as that. There is no risk because you're trading our money, not yours. There are various rules, obviously, as you would appreciate, risk and money management rules, but essentially you are trading our money. You have very simple targets to achieve, profit targets, and you get a kickback on the profits. You start with an evaluation account. We set a very simple profit target, and basically that evaluation account is there for you to prove to yourself that you have consistency at that particular level, and it also proves it to us too. Once you've achieved that particular profit target, you start with either a $5,000, $10,000 or $15,000 account. We then multiply that by 4, we factor it up by 4. So if you start with 15,000, we give you 60,000 to trade, and thereafter we double everything. So you go 60, 120, 240, 480, right the way up to 2 million. You earn as you go. We kick you back profits. On the evaluation stage, it comes as a lump at 35%. On the what we call portfolio manager levels, which are the next levels up, you earn at 50%, and you earn that monthly. So you're getting a monthly rebate of profit that you earn on a monthly basis. On the evaluation stage, you can only trade 28 currency pairs, but we've expanded that out onto the other levels where you can now trade indices, and you can also trade gold, and you can find out about all that just by clicking the link there, and it will give you all the details of the program itself, markets you can trade. Those are the 3 evaluation accounts where you start, and these are the additional markets you can trade. That's the indices and gold that you can trade on the higher levels. Finally, just over to Anna's site, annacoulling.com. This is where you'll find all the books, all up on Amazon, either in Kindle or paperback, all the links to all the various sites, and all the analysis that we do down the bottom here as well. That's it. Thank you very much indeed for coming along today. I hope you've enjoyed it. Hope you've learned something perhaps you didn't know before. And as I say, we do appreciate you joining us. We will be back next week. Not sure what format. We may do the same as this. If people enjoyed it, if they didn't enjoy it, then we'll maybe change, do something else. So thank you so much for coming along today. Enjoy the rest of the trading session. Watch out for FOMC shortly in the next, where are we now? 2.5 hours, 3 hours, whatever it is. That will impact the market hugely. Be no doubt lots of volatility, and then it will settle. And then we'll see how the markets react tomorrow once the news has filtered through. So thanks very much indeed. See you soon. Enjoy the rest of the trading day. Stay safe, and bye for now.